Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 7th of July. So it's a non-farm payroll Friday, and we've seen a pretty lackluster start to the week with the 4th of July holiday, but certainly things have ramped up over the last 24 hours or so. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and you can see that we've had a pretty nice move over the last couple of days in terms of what really has been a pretty good pattern. Look, we saw the sell-off from around that sort of 68 mark, really good sell-off from that point onwards and down straight to support where we would have expected it to find support. We know that we've had previous support there at around that 66 cent mark, and it did not let us down. A pullback all the way to the moving averages. Look, this was a pretty good sell zone, really. Like, I mean, if we look at it from a fib standpoint, we'll pop a Fibonacci retracement on this one, and you're going to see it'll be very close to the 38.2. As you can see, it's right on that there. So you can see the pullback to the 20 and the 50 moving average. It touched the 38.2, so you know you're in that zone of if it's going to pull back, this is the place it's going to pull back. But not only that, yeah, if you do a horizontal line, I don't like drawing too many lines on a chart and leaving them there, but if you do that, you can see that we've got a lot of interaction at this level as well. You've got days and days of resistance right through there as well. You can see that in very short term, and support and resistance right back through here at the start of 2023. So no real surprise that this was a pullback zone, but when you identify those zones, this candle there was ripe for the taking. When you can see that pullback, you know, we're obviously weak because, I mean, we've seen a big drop from 68 all the way down to the lows here and then a pullback to this level. So hopefully you're able to take advantage of that situation because that was a really good sell zone. And of course, as always, the first place that you really want to be taking your profits is the previous touch. So, yeah, landing an point of view is going to get you down and out at the 66 cent mark. If we do get a further movement down, obviously, yeah, that 65 cent mark is going to be the next logical target because we know that we've got very strong support there. But really good trade so far, and a very vital point where for the Aussie USD, if it breaks through and gets into the 65 cent mark and closes there at the end of the week, you know, we're going to see probably a fair bit of weakness and down to these levels hopefully next week if we do get that continuation. And of course, that is going to give us a very big lightning bolt. So pretty high probability that will happen. But of course, if it bounces from this level here, the first point that we're going to look for resistance is going to be the moving averages again. So pretty tight trading if you're going to scalp it. But remember, it is non-farm payroll. So we're probably going to see a little bit of subdued movement for the next trading period until the results come out at 10:30 p.m. Melbourne time tonight. We'll move over to the US dollar CAD now, and yeah, nice big move here. We were talking about it last week. Obviously, it was a pretty good zone to be looking at a move up. It was pulled up to the 20 moving average. If it was going to stop there, that was going to be the halting point, but it certainly kicked off. You could even probably make a case for a flag there. Really, it's a pretty wide flag with so many big intersection points of range with these doji candles, but it is a flag nonetheless. You can see the flagpole end up again. But more importantly than that, we've got a lightning bolt now. It's gone straight into a resistance zone though, so we've got to be mindful that there is a little bit of resistance here. This has reacted obviously to the news as well, so we've got to be a little bit careful about that. We know we've got probably subdued trading again, like I said, today for the next 12 hours or so, or 14 hours. So just be mindful that you might see a little bit of weakness at 50 moving average, but this rut has been broken with this breakout move, and we've got a very strong lightning bolt on the way up. Okay, so really good trading. For me, it needs to break this zone now. Very difficult to get in this. It looks very clean and clear cut on paper, but this would have been a difficult one to get into, mainly because the break was so significant. And it's hard to get in on if you're on a smaller time frame, perhaps. But this was a very big move, and yeah, you wouldn't be taking the long at this point. Let's just say that. It's pretty hard to enter this trade now. That said, though, if it comes back to the 20 moving average and retests this zone from above, that makes it a very lucrative trade. The easy trade will be straight up to that 133 area again. So it's setting up now for a potential move back up, but we are at resistance. If we roll over at this point onwards, though, and we start to see weakness, the next point is back down to that 132.80. That would be my scalp down to that level there. Looking pretty good on the CAD. US dollar yen. Look, it's still weakening. In my mind, yeah, it's hit a very important zone of resistance. We know that. We talked about it there. So it's very important. Clearly, and we've had a week now of movement where it has tried to sell off. this is not really reacting to the dollar strength as much as the other dollar-based pairs. This is kind of its own beast at the moment, which is not a bad thing. I don't really mind that. But, you know, to me, the 20 moving average is calling it, and I think it wants to get there. I think any sort of weakness whatsoever in this zone, and I think it's going to gravitate probably to that 20 moving average in the first instance on the way down. Yeah, the break zone is around that sort of 144.20. I'm still confident in that level. So if we see continued movement down on the smaller time frames, go to a 15-minute or a 1 hour chart, if you start to see a little bit of weakness in that zone, yeah, I think a good landing zone for it is around that 143.20, which will coincide with the 20 moving average. If it gets back above the 144.60 area, for me, it needs to break this zone properly now. It needs to break the 145 to be interested in any long whatsoever. If it breaks that up to the upside, even then I'd still be a bit skeptical. I'd probably wait for it to pull back. But either way, it's reasonable trading, but it is, you know, it's very strong resistance up there. So any move up is going to be met with a lot of force from the sellers. So just be mindful of that. If we see closes during the week underneath the 144 level, though, I think we could probably see a little bit more weakness early into next week as well. And then, yeah, trading down to the 20 moving average, that 143.20, 143 area is probably the way to go on the yen. Dollar index now, and you can see that we've got, yeah, a bit of, oh, look, it's been a funny sort of day. We know that it's been up and down with, yeah, potential interest rate rises or fears of interest rate rises in the US, has played havoc with the markets a little bit. They did get a fair bit of recovery late in the trading period, though, so you can see, we'll see on the S&P 500 shortly. But 200 moving average is holding it up at the moment, and it is range bound in between the moving averages, like we said last week, hasn't really changed. So, and until we do get a breakout of this particular zone, there's, yeah, not a lot to get excited about. I mean, we'll go to the euro. That's where the real action is, I guess. And realistically, yeah, nothing has really changed all that much. We've seen the weakness down to the easy point. Like I said, the easy point is back down to that 108.35, the previous low. Always the best way to trade it. But in reality, you know, I think you could almost, well, we'll draw it and we'll see what it looks like. I think we can probably put a triangle here. We've got a descending triangle forming. It's a pretty straightforward one too. Yeah, you can see there, it is there. At the break zone, if it's going to break, this is the level you want to be breaking it from. Yeah, clearly the highs are getting lower and lower, and the base is formed at around that 108.50 area. If we get a break below that level, this pattern is going to coincide with the support level where, you know, we need it to get to form that pattern, which is around that 107. So we'll keep a very close eye on this one. It's still trending down, finding support at that 108. But if we do get a break below the triangle bottom, yeah, the next target's going to be that sort of 107, 107.20 area, which is a pretty good target for it. If we get a break above it, though, and we get a series of higher highs and higher lows on probably something like a 4 hour, I wouldn't go much lower than that because, yeah, there is a little bit of rot setting into this downtrend. If we get a sequence of higher highs and higher lows on a 4 hour chart, for instance, then we could look at taking it back up to that 109.80 area, which would be the first point of resistance if you were looking at a long position. So a break above the triangle, we start to look for that 109.80, but a break below it, of course, we look for the pattern formation, and we're looking for around about that 107.20 to 107 mark as you take profit. And on to the S&P 500 now. You can see obviously a big session, yeah, a big deviation in movement. We've got 10, basically, you know, nearly 70 points of movement, which is a pretty reasonable move on a non-farm payroll week. As I say, yeah, we normally get a fair bit of weakness in these sorts of weeks where the market doesn't really do much. It's had very low volume early in the week, of course, because a lot of institutions were closed, but it had a little bit of a rebound towards the end. Now look at 20 moving average, caught it again, but yeah, this high here is not that much higher than that high there. So it's starting to form a little bit of scariness for any move up. I think, you know, we can definitely clearly see bearish divergence here. Oops, we can see the bearish divergence on the daily time frame. Okay, so there's no worries about that. Class A. And really, like I said, this high here, although it was, you know, insignificant because of the volume and public holidays, it barely moved up higher than the previous high. So it's very, very minor. Okay, so what if the 20 moving average holds it up, everything's going to be sweet for it. And then we can look for moves back up to that 44.50 area as a scalping option. But if we do get a daily close below this 20 moving average, yeah, the logical conclusion is going to be that the 43.20 will be calling it. That's the next support zone for it. So very strong support at this level. But it's going to be all up to the 20 moving average. If price can stay above there and survive a non-farm payroll result, if we're trading on Monday above the 20 moving average, I'd be looking for targets at around that 44.50 in the first instance early next week. But if we get a daily close below this level, I think that we'll be looking for a move down to around that sort of 43.30 to 20 area in the first instance. And if that happens, yeah, the weakness is probably set to continue, because I don't think this support is all that great. I think it's just the first landing zone. If we get a breakthrough there, we could definitely start to look at bigger moves later in the week or into the week after. That trend could certainly start to continue. But let's see if it survives the non-farm payrolls. They're pretty straightforward, really. If we're above the 20 moving average on Monday, we look for moves up to the 44.50. And if we get a daily close below the 20 moving average on Monday morning, we start to target the lower parts of the 4,300. And a break of that, then we start to target lower. But in the first instance, down to the 43. So I hope everyone's had a great week's trading. Plenty of action the last day or so. Our levels are still holding. Hopefully we'll get some breaks early next week, and we'll start some get some serious trending happening in some of these big indices and currencies. Have a fantastic weekend. I look forward to seeing you all next week.